Hello, in this presentation we will work a problem where we will focus in on the accounts payable or purchasing cycle. We will be recording transactions related to the accounts payable or purchasing cycle, meaning that we will be purchasing items on account or services on account and then be paying them in a future time. It's useful to look at processes by cycle, as in the accounts payable cycle, the accounts receivable cycle, the payroll cycle, rather than just by looking by date, because it really focuses in on those particular cycles, how they will work, and also those will obviously be types of areas where people tend to work in larger accounting departments focusing in on these particular cycles. It is, however, useful also to work some problems, more comprehensive problems, just by date rather than by cycle, which I recommend and we will do at a later time as well. These transactions will be recorded here in the general journal, which is just going to be this space on the left-hand side. That's where we will record the journal entries. We will then post those journal entries not to a general ledger this time, but just to this worksheet. And the reason is that this worksheet will give us a quick view of what is happening to these particular accounts when there are only a few transactions. It gives us a really good idea of what is going on. Later on, we'll take a look at transactions posted to the general journal, to the GL, the general ledger, and then posted to create the trial balance. That being a bit larger process, it's not as easy to see all in one area, and therefore it's more difficult to see what actually is going on in terms of what's happening to assets, what's happening to liabilities, what's happening to equity, what's happening to revenue, and what's happening to expenses. So this is going to give us an idea of the big picture. Then we'll go through the full process and see the posting to the GL and then the creation of the trial balance. We'll also look at the accounting equation and see the effect on the accounting equation. Therefore, we will see what happens in terms of debits and credits, and we will see what happens in terms of the accounting equation. So let's go down and take a look at the first activity. We have a purchase supplies on account. So we're going to purchase supplies on account. We're going to go through our thought process. First question, as always, is cash affected? And in this case, we're going to say, no, we purchased something on account. And therefore, we paid for it with kind of like a credit card, we can think of it. Now, we might be thinking, that's going to be our accounts payable account. That's what we will be working with. But note that we might not be as clear as to whether we should be debiting or crediting the accounts payable. And therefore, that's why I suggest going to the second question, if cash is not affected, to think about what the thing is that we received, often being easier to understand what we should do with the thing we received. We know it's going to go up because we received it, and then we need to know whether we debit or credit it. So in this case, we bought supplies, so we know that this is a supplies account. We can see it here. We can see it next to all the other assets. Therefore, it's going to be an asset account, and we know that it's going up because we bought more of it. Like other assets, supplies has a normal debit balance. In order to make something go up, we do the same thing to it, which in this case would be another debit. So I'm going to go ahead and debit supplies. I'm going to copy supplies. I'm in cell E7. I'm going to right click on that cell and copy, and then put that in our first section of our journal entry in cell B5, right clicking and pasting not the values or not the formulas and the values, but just the values. So just the values. And there we have that. So we could just type that out there as well, but this copying and pasting is good practice. Now note that we're going to increase that with a debit, as we said, 585. You may be asking, hey, supplies sounds like an expense to me. Why aren't we expensing supplies? And note that supplies is typically going to be our introduction to inventory, basically. We're going to treat supplies kind of like we will inventory for the same reason. That being that if supplies is significant, we need to put it on as an asset because we haven't yet consumed it in order to help generate revenue. Definition of an expense, something that we have used or consumed in order to help us achieve the goal of the business, revenue generation. The assets, on the other hand, are something that we have that we expect to consume sometime in the future in order to help us generate revenue. These supplies then, at the time of purchase, are something we have not yet consumed but will consume in the future, therefore an asset, not an expense. We will expense them at the time we consume them, and that'll be in the adjusting process, which we'll talk about later. So if we debit supplies, then we will credit something. I'm going to represent credits with brackets or negative numbers in Excel. You can show the negative number by just putting negative 585, or use this formula of negative and then point to this cell. Excel seeing this negative and using it as it would in a similar fashion to an equal sign, and then it's going to take what's in that cell and just basically multiply times -1 or flip the sign. So there we have that. We have the 585 and the credit to 585. Now we just need to know which account will be credited, and of course we will not be crediting cash because we purchased it on account, and therefore we will be crediting the accounts payable. That's our form of payment. You can think of it as acting similar to a credit card in that we're purchasing something, put it on our account. And so I'm going to copy that in cell E8, put that in B6, right click and paste 1, 2, 3. I'm then going to double click before the A and space that out 3 times, indenting that as we go. Now note that the key term here is going to be that on account. So whenever you see on account, that typically means that it will be either accounts receivable or accounts payable involved in the transaction. Of course, here we are dealing with the accounts payable account. Note that some texts might say on credit, but oftentimes a text will avoid that term so that we don't confuse kind of the term of credit with debits and credits when recording debits and credits here. So let's go ahead and post that out then. We have the supplies first. Supplies is going to be right here on the trial balance. We will then record that in cell G7. G7 equals, I'm going to point to that 585. Really useful to use formulas. So although you could type it in here, highly recommend using the formulas, and that will pull over that information, taking it from 0 up by 585 to 585, putting us out of balance. Note that these trial balances are represented with debits and credits, debits as positive numbers, credits as negative numbers, and therefore the debits minus the credits, as in over here, will be 0. So if debits equal credits, then debits minus credits will be 0. This format, as I've described in some prior videos, is going to be really useful to use. So I really think it's worth taking account of and looking into. Otherwise, these worksheets will be much more complex and it'll be more difficult for us to see a quick view of what is going on here. If we use this format, simplifies the process, makes it a lot easier to fit on one screen, makes it a lot easier to see what is going on, and in practice, very practical to understand. So we're then going to post the accounts payable. So here's the accounts payable. Here it is on the trial balance. Here is where we will post it in cell G8. So we will say equals, point to that 585, and when we hit enter, it's going to go up in the credit direction, put us back in balance down here. So there we have it. Remember that that does not mean that we have negative payable. It means that it's going up in the credit direction as a liability, payables being a credit balance account. If we were to then see the effect on the accounting equation, we would see that supplies is going up because we bought more of them, so we will increase supplies. The liabilities are they're going up as well because we are incurring more accounts payable. We owe more money. The bad thing is going up. We also know it's going up because if this side went up and this side happens to be liabilities, which is affected, then it too must be going up. And we know that the equity then is going to not be affected. Next transaction, we'll take a look at B, which says we paid for supplies purchased in the past on account. So in this case, I would ask our question. We're going to go through our normal questions. Is cash affected? And in this case, we're going to say, yes, it is affected, and the keywords are paid. Now, it's very possible that we could get mixed up with this one because it also says on account, and we might be saying, well, if it's on account, then cash isn't affected. But note that that would be the case when we purchase something on account, as we did in A, but in B, we're paying off the account. So therefore, it's useful to first think about the cash first, and anytime it says paid, that typically means we paid with cash. So first let's work with the cash, and then we'll see what happens on the other side of the transaction. Cash is an asset. Assets have debit balances. We need to make it go down because we paid something. Therefore, we're going to do the opposite thing to it. We will credit cash. So I'm going to copy cash. I'm going to scroll back over here. I'm going to put it on the bottom. So here's B. I'm going to put it on the bottom in cell B9. Right click and paste 1, 2, 3. I'm going to start with the credit. I'm going to double click before the C, indent 3 times. I'm going to start with the credit to the cash, even though debits go on top. We don't need to, because debits go on top, start recording from left to right, top to bottom as we read. I would suggest putting the journal entry together in whatever way makes the most sense to us. This system usually does because it's easiest for us to know what happens to cash first. So cash is going to be that 585. I'm going to put a negative. I'm in cell D9, 585. Then I'm going to put a debit above it to the left in cell C8. I'm going to use our formula again, and I'm going to say negative of that number. So it's going to say I want a formula, meaning I want to kind of like an equal sign, take whatever's in cell D9 and multiply it times -1, flipping the sign. So again, you could just type it in there, but I'm going to start to practice those formulas as we go. Then we just need to know what that account will be. Now, if we paid cash, you might think that we purchased something, such as supplies, but we had already recorded the supplies up here in journal entry A. What we are doing now is, of course, paying off what is owed for that purchase that happened in journal entry A, that being the accounts payable account. So accounts payable has a credit balance here. We need to make it to go down by doing the opposite thing to it, which in this case is a debit. So I'm going to copy accounts payable in E8. Going to put that in B8, right click and paste 1, 2, 3. So there's going to be our transaction. Again, we knew that we were going to debit the accounts payable because we credited cash and therefore must debit whatever other account we are using. We also know that we're going to debit by double checking, asking our questions. Well, accounts payable is a liability account. It has a credit balance. If people are paying us, then that account must go down. Why? Because that represents how much money is owed to us. And if they then pay it, then it needs to go down. We make something go down by doing the opposite thing to it as its normal balance. It has a normal balance of a credit, opposite then being a debit. So let's post this out. I'm going to post the accounts payable. That's in cell G8. Something is in it. Therefore, I'm going to double click on it, go to the end of it and say plus, and then point to that 585 right there. So it's going to go down to 0 here and put us out of balance once we hit enter. So it decreases it back down to 0. Cash then will then be recorded up here in cell G5. So in cell G5 equals, point to that cash credit. It's going to take this debit balance down by a credit of 585 to 49,415. Puts us back in balance down here, meaning that the debits up top of 50,000 equal the credits down here. No effect on net income from these first two transactions. Effect on the accounting equation. We're going to say that cash is going to go down, therefore assets are going down. The liabilities are going down as well. And there's no effect on the equity section. Next transaction, if we scroll back down, we're on C, where it says purchased auto service on account. So therefore we purchased auto service. We're going to say, is cash affected? And the first question is going to be, no, cash is not affected because we purchased the auto service on account. I would then ask what we received. We might then say, well, accounts payable is affected, but I would first focus on what we received because it's typically easier to know whether or not to debit or credit the account related to the thing that we are receiving, in this case, auto service. Now, you might be thinking auto service should be the auto of an asset, but auto service is going to be something we consumed, therefore it's going to be an expense. If we have the trial balance, we see the expense down here. Expenses are going to be always debited, so expenses are going to be always decreasing the net income. They're always going to go up in the debit direction and bring down net income, and therefore bring down the total equity as well. So by the nature of the auto expense being an expense, we know that we must then debit it because all expenses have normal debit balances. They only go up. So we're going to do the same thing to it, which in this case is another debit. So I'm going to copy that. I'm going to paste that in B11, right click and paste 1, 2, 3. By the way, knowing what the expenses are doing may not be as known to us as what we do to cash or other assets, because we typically work with cash the most. But expenses is going to be one of those other accounts because there's a lot of different expenses. We pay for a lot of different things that we'll get used to fairly soon. So you want to get used to the idea that expenses only go up in the debit direction. So then we're going to have that, and that's going to be for 416. So we're going to put 416 in cell C11. And then I'm going to put a negative 416 in cell D12. I'm going to do that with a formula by putting negative and then pointing to this 416 there. That will take that 416 and flip the sign. Now we just need to know what that account will be that we will then credit. And of course, it's not going to be cash because we did not pay cash. It's going to be accounts payable. So we're going to credit the accounts payable account. I'm going to copy that. I'm going to paste that in B12. Right click and paste 1, 2, 3. I'm going to double click before the A and spacebar 3 times. And there we have that. So we have a debit to auto expense and a credit to accounts payable. Now we already know that we're going to credit accounts payable due to the fact that we debited the expense. However, it's also useful to think through that. We know that the accounts payable is a liability. Accounts payable has a credit balance. The bad thing is going up, meaning we owe more money because we purchased something on account. And therefore, we are going to do the same thing to it as its normal balance, which is going to be a credit. So we're going to post this out. So this is the journal entry. We will then post out here to the worksheet. So we've got the auto expense. That's going to be down here in cell G14. In cell G14, I'm going to say equals, and then point to this 416 in cell C11. And once we select enter, we're going to bring that balance from 0 up by 416 to 416. And we will then be out of balance. Net income will go down. So there we have it. Net income is revenue minus expenses. Credits of revenue, debits of expenses. The credits are greater than the debits by 49,584. We're then going to credit the accounts payable. So here's accounts payable on the trial balance. Something is in it, although it is 0. I don't want to delete the 0, so I'm going to double click on it because that'll show us what's happening. And then I'm going to go to the end of it and say plus, and then point to this amount here. Now, I know that we're getting a lot in this account here, so if something goes wrong, if we enter and we have to delete it, then just go ahead and say equals and find all the accounts with a payable. So here's one has a payable in it. I'm going to say plus, always plus. And then here's one with a payable plus, and then here's one with a payable. Excel then sees this is a credit or a negative, this is a debit or a positive, this is a credit or and it'll do the math for us. We're always going to use the pluses over here, and that'll kind of simplify our functions on this side. So there we have it. We're just left with that 416. That puts us back in balance. Let's take a look at the accounting equation. We know that nothing happened to assets. Neither of these accounts are assets. So assets actually remain the same, no impact. And then we know that the liabilities are increasing because they're going up due to the fact that the payable is going up. And we know that equity then must be decreasing. Why? Because if the liabilities are increasing and it's on the same side of the equal sign as the equity, then the equity must then be decreasing in order to remain in balance. We also know that equity is decreasing because it will do the same thing as what happens to net income. Net income went down because expenses went up. Net income calculated as revenue minus expenses. Therefore, the equity section will too go down as net income goes down. Next transaction, we've got D, purchased business meals on account 1,950. First question, is cash affected? And of course, no, because we're working with the accounts payable here. We paid on account. We probably know which way that's going now, but again, I'm going to try to think about what we received first and go through our normal thought process, a standardized set of steps, because later on, as these journal entries get more complex, if we go through a standard set of steps, building what we know as we know it, it will make things easier as we go. So even if we've memorized these journal entries and we know what the debits and credits are, I would think about the normal process and keep that process in mind. We bought meals and entertainment, so that's going to be an expense. It's something we consumed in order to help us generate revenue in the same time period, as opposed to purchasing something that we have not yet consumed and hope to consume sometime in the future. This is something that we used up in order to help generate revenue now in accordance with the matching principle. Then it would be an expense. Expenses all have debit balances, and expenses only go up in the debit direction. Therefore, we're going to debit the meals and entertainment expense, copying that account, putting that in cell B14, right-clicking and pasting 1, 2, 3. The amount will then be $1,950. I'm not going to put any commas or anything. I'm just going to type the entire $1,950 there. I'm going to credit the same amount, negative, of $1,950. And I'm going to use formulas. You could just put a negative of that number. Then we just need to know what this account will be. It's not cash. We're not going to decrease cash. We did not pay cash. We put it on account. Therefore, the account will be accounts payable. I'm going to copy accounts payable in cell E8 by right-clicking and copy. Put that in cell B15 by right-clicking and pasting 1, 2, 3. I'm going to double-click before the A and space 3 times for the indentation and then post this out. So here's meals and entertainment on the journal entry. Here it is on the trial balance. We will record it in cell G13 by saying equals and pointing to that 1,950, bringing the balance from 0 up by 1,950 to 1,950, putting us out of balance by 1,950, and bringing net income down by 1,950, net income calculated as revenue minus expenses. And there we have that. Now we'll record the second half, accounts payable. Here's accounts payable on the trial balance. We're going to record it in cell G8. Something is in it. Therefore, we're going to double click on it. Go to the end of this. And again, I know it's a long transaction, but you can see where all these accounts are going. So it's D6 plus C8 plus D12. If you record these journal entries in the exact same cells as we have here, as I recommend, then we could just type that in there and then say plus, and we want to add to it this 1,950. Once we hit enter, we will be back in balance here, and this goes up to 2,366 as a result of these two transactions, auto service, meals and entertainment, which have not yet been paid and need to be paid sometime in the near future. Okay, so then we're going to say, is cash effect, or what's the effect on the accounting equation? Nothing to assets, no effect on the assets as of this time. We see the liabilities went up because the payable went up, so liabilities are going to increase. And we know that the equity must go up for a couple different reasons. One is that liabilities increased and nothing happened to assets. Therefore, this must then go down in order for this side of the equal sign to go up and down. We also know that the expense went up, bringing net income down, and total equity always goes in the same direction as net income. Net income decreasing results in a decrease to the total equity. E then. Last transaction says, paid for auto service which was purchased on account in the past. First question, is cash affected? And in this case, it is. And the keyword is paid here. Note that it also has on account. So you might say, well, that must be something other than cash, which it is. But we're going to have, in this case, both cash and the other thing other than cash, which is accounts payable. When we purchase something, remember, on account, that means we got something and we paid for something other than cash. We put it on account. But then we need to pay off the account, which means we're going to have that accounts payable, on account, accounts payable, and cash. So anytime we see paid, we're just going to basically say, that must be cash. So cash has a debit balance. We need to make it go down. Therefore, we're going to do the opposite thing to it, which in this case is a credit. So I'm going to copy cash. I'm going to put that on the bottom. So here's E. I'm going to put it on the bottom in cell B18. Right click, paste 1, 2, 3. I'm going to double click before that C, space 3 times, and enter. I'm going to put it in the credit column. We're going to put it in the credit column D18. It's going to be a negative 416. and enter. We're going to debit something by 416. I'm going to use a formula in order to do this. Negative of this number. That negative just means I'm going to take that number and flip the sign, or you can think of it as take that number and multiply it times -1, resulting in a positive 416. Then we just need this account here, and we paid cash for the auto service happening in the past. So we didn't have the auto service done today. We already recorded it up here as an expense. Now we're paying off what is owed. The account representing something owed is accounts payable. So there's accounts payable. It has a credit. We're going to reduce it. So we're going to do the opposite thing to it, debiting it. So I'm going to copy that, paste that here. So in B17, accounts payable. Now again, we know we're going to debit that because we credited cash. And if we think through it again, we could say accounts payable has a liability represented by the brackets. We know that it is going down because we got paid. So therefore, it has to be decreasing the amount that people owe us. This is a credit balance. In order to make something go down, we do the opposite thing to it, which in this case would be a debit. So we can kind of double check the debit here going through that process there. Cash is going to be decreased. That means the assets will decrease on our accounting equation. Assets are going to decrease, and we see that accounts payable is going to decrease as well. So accounts payable is going to decrease. I know I didn't post this yet. So decrease, and then nothing's going to happen to the equity. Okay, so now let's post this. So we're going to post this out. So accounts payable, here's accounts payable. Something is in it in cell G8. Therefore, we're going to double click on it, go to the end of it, say plus, and then point to this 416. Once we hit enter, that should bring the balance down. So there it is. We're at 1,950 is the balance now. That ties out to what has not yet been paid for the meals and entertainment. Then we're going to post the cash. So cash is up here. Here's the cash on the trial balance. We are in cell G5. Double click, go to the end of it, plus, scroll back down. We want this cash and enter. And again, I know we're going back and forth, so if I double click on it, you want equals D9 plus D18. That will bring the cash to 48,999, and that'll put us back in balance here. Our net income is currently at 47,634. We saw the impact on the accounting equation. Last couple questions we can think about. Are expenses recorded when cash is paid? Not necessarily, not under the matching or expense recognition principle. Our expenses recognize assets have been used or liabilities incurred in order to generate revenue. Our expenses recognize when it should assets have been used, and that's going to be the definition. So that's the definition of basically the matching or expense recognition principle, meaning we're going to recognize the expenses kind of like when revenue is earned, when expenses are incurred. Now, we could represent that by saying expenses are incurred when we consumed an asset, like cash or something like that, or incurred a liability, like accounts payable, in order to help to generate revenue. That's one way we can basically define the consumption of the expense under the matching or expense recognition principle.